We got GME earnings on deck this week, Elon and Trump drama, Tesla took a brutal fall towards the end of the week, and Michael Burry, aka The Big Short, is back at it again with a massive short position on one of the largest companies in the US stock market. We'll cover that and more, not to mention we got a Fed rate decision coming next week. This might be one of the most important market prep episodes here on Stonkcast for the month of June. Stick around, we'll break it all down. Don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it.
No, Frieza! Don't do it! Go!
You're watching Stonkcast.
Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor. We've got you covered. We tackle the latest market news, give our 2 cents, and maybe just maybe help you make some money along the way. I'm your host as always, Brandon Shar. Happy Sunday evening. We are back for a market prep video. We got a lot to get into, so let's jump right into it. So first of all, I want to do a brief breakdown of where we stand right now in the overall market. Taking a look here at the S&P 500. So we had a good week last week. We are above the 5,900 level. And actually, folks, we have just crossed the threshold of 6,000 on SPX. A pretty big deal. As far as the all-time high, we are creeping up to it, which is 61.47. So we are about 147 points off of the all-time high on the S&P 500. So that is great news if you're a bull. We've continued to see a massive run off of those April lows when President Trump announced his tariff plan, his reciprocal tariff plan. And technically speaking, we're more than 20% off those lows. And so technically, we are in a bull market according to that. So we are not that far off from the all-time highs. I will be looking this week to see if we can in fact break that. We are, not that far off of it, but as far as Friday, it was technically a green day. Again, we're holding above 5,900, and now the level to watch, of course, is going to be the psychological level of 6,000. But technically, we did manage to close above it on Friday, so that's great. And if we look at the relative strength index indicator, known as RSI, as far as right now, we are sitting at 65 on that. So anything above 70 is going to be considered overbought. So it does appear that we still have some room to go on the S&P 500. Taking a look at the NASDAQ, also had a good week last week. Technically closed red on Friday, currently sitting at 21,761. with an all-time high of 22,222. So a lot of twos there. So we're also creeping up to an all-time high on the NASDAQ 100 as well. And as far as the relative strength of the NASDAQ, about the same, sitting at 67. So again, it does appear that we still have some room to go on that as well. Quick check-in on the Russell for small caps. Had a great day on Friday. Is still below the 200-day moving average, but is moving up to it. It is currently sitting right now at 2,132, with the 200-day moving average being at 2,176, creeping up to that as well. And the RSI on the Russell is about the same. So we still have room to go there. If we look at all of the sectors in the S&P from Friday, they were all green. So that is awesome to see there as well. As far as the VIX right now took a tumble on Friday and is at one of the lowest points that we have seen since really back in February, sitting just above 16 on the VIX right now. So well below 20. That's great to see. Want to see that stabilize, stay below 20. And, that's good news if you're a bull. You want to see it under 20. That's showing some confidence in the market. So we're seeing the VIX coming off since those insane runs up to 60 that we saw back in early April. So that's great news. quick check-in on Bitcoin in the crypto space. So as of right now, at time of recording, Bitcoin is up 0.7%, sitting at 106,365. As far as the week ahead for Bitcoin, what I'm looking to see is if we can get above the all-time high of 112,188 roughly. And as of right now, at time of recording at least, Bitcoin is showing some strength after a dip down to about 101. We'll see what Bitcoin can do this week, but as of right now, it's really looking pretty strong ever since, the April lows. Very similar to the overall market, the S&P. Obviously, it had a dip with the tariff announcement, and really since then, it's just been climbing and climbing and climbing. And so as of right now, it's looking pretty good. We'll see what it can do this week ahead. So that's a brief rundown of where we stand right now in the market. Let's jump into the news cycle. So unless you've been under a rock, we have had a lot of massive news between Elon and President Trump over the past week. And really, it's been really entertaining, in my opinion. It might just be the news story of the year developing in front of us. And so what I want to do is just a brief rundown of the timeline, kind of where we're at. Obviously, Elon was a major part. I think this is not something that is really debatable. Seems like a pretty well-known fact. Elon Musk was a big part in getting President Trump into office. According to this news article here from NBC News, this is just a brief rundown of the timeline, right? So I just want to cover a couple things here. November 2024, Trump wins the election after Musk spends $250 million on the race. He was a big part. He was on the campaign trail with, President Trump, obviously, and really was a major part in campaigning and raising funds to support President Trump and his campaign. In January 2025, Musk speaks at Trump's inauguration rally. He was a part of that. March 2025, Trump publicly limits Musk's authority amid clashes with cabinet. So this is when things started to go a little sideways. In an early sign of tensions between Musk and several cabinet members, Trump placed limits on his advisor, making clear in a True Social post that staffing decisions across the federal government will be determined by agency heads, not Musk. So that was in March. They were buddy-buddy. We saw a Tesla showroom demonstration on the White House front lawn, where Trump and Elon are in a Tesla. They're having a great time. And then in May 2025, Musk exits the White House amid simmering tensions. On the first day of May, Musk told reporters at the White House that he would soon step back from Doge to focus on his companies. Like gave a lift to, Tesla as a company. Their stock price went up on that news. Comparing the shift to going from full-time to part-time work, the announcement came after Tesla reported a drop in its first quarter profit and revenue. So if you remember a couple weeks ago, in the Oval Office, we had President Trump, sending off Elon, talking about how he's such a great patriot, giving him a cool gift on his exit, and everything seemed rosy and good. And then as soon as Elon left, there was a barrage of social media posts on X between Elon initially and then Trump, kind of firing back. And that's kind of where we stand right now. So we look at June 2025, tensions boil over and spill into public. Days after formally departing the White House, Musk launched a scathing attack on the Trump-backed bill making its way through Congress. He said, quote, "I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination. Shame on those who voted for it. You know you did wrong. You know it." Asked about those criticisms, Trump expressed disappointment. He said, quote, "Elon knew the inner workings of this bill," before suggesting Musk's opposition to the bill was personal. He said, quote, "Elon is upset because we took the EV mandate, which was a lot of money for electric vehicles. They are having a hard time, the electric vehicles, and they want us to pay billions of dollars in subsidy." That's what Trump said. So the attacks quickly grew more personal Musk called out Trump's ingratitude, arguing that Republicans would have lost the 2024 election without his support. You know, from my standpoint, it kind of seems hard to argue against that. Trump, in response, said Musk, quote, went crazy after being asked to leave his White House role, and he toyed with the idea of severing government ties with Musk's companies. Musk replied by claiming Trump was in what are known as the Epstein files. That was the big whammy nobody saw coming there, and said Trump's tariff policy would cause a recession. He also amplified a post calling for Trump to be impeached and replaced by Vice President J.D. Vance. A day after the barrage of attacks, Trump told reporters he's no longer thinking of Musk. Quote, honestly, I've been so busy working on China, working on Russia, working on Iran, working on so many. I'm not thinking about Elon. You know, I just wish him well, he said. So it has been a doozy of a week this past week. If you were paying attention to X and all the posts going back and forth. And so these two who, you know, were seemingly hunky-dory, great friends, well, it seems that that is no longer. And so let's just take a quick look here at Tesla and just to see how it impacted the stock. And it was a doozy on Thursday. The stock was down something like 14%. Taking a look here at a daily chart, it had already been coming off as it failed to really break out above 350. It saw some red. And then on Wednesday, you know, it opened at 344, down to 331. And then on Thursday was the big day. And you can tell here, this is such a great case study of conviction and what conviction looks like, right? So Tesla was down 14% on Thursday, and look at the volume that came in on Thursday relative to some of these other days, really over the past month or so. Massive volume came in, which shows conviction in the sell-off, right? It shows you it's not just retail getting involved. Those are institutional sell orders, big money, whale money, if you will, coming in and really dropping the stock price on Tesla. And for all my degenerates out there, I hope you were able to make a bag on this. I was fortunate enough to do so myself. I had some 270 put strikes that I purchased on Thursday around noon when I saw some of the initial posts coming out from, you know, Elon and just some of the drama that was starting to get brewed up there. And I was basically able to make 600% on my puts, so I was very happy with that. Earned $500 into $3,000, so that's not a bad day at all. I'll take that any day of the week. And so I hope you were able to capitalize on that. And then Friday was kind of this inside day here. We are technically above the 50-day moving average as we did cross below it on Thursday, technically closed below it, and then we had a bit of a rally up in the overnight session coming into Friday, and you know, we tapped the 50-day moving average and the 200-day and technically closed in between the two. So is from a technical standpoint, right? Looking at this week ahead, I don't think the Trump-Elon drama is done just yet, and I actually entered back into some puts after selling those massive gains I had. I sold those on Friday morning, and then Friday, about an hour before the close, I actually got back in to some puts. I believe 245 strikes that expire this upcoming Friday, simply because I don't think we're done. I don't think the selling on this thing is done. I think there's a lot of uncertainty right now, and it's just not good for the company, especially when you have the president threatening to remove some of the contracts. That's not great. This thing has definitely gotten heated. You got personal attacks, and it's just not a good setup for anyone. And I'm sure the board, the directors in Tesla are losing a lot of sleep right now over this scenario, over this situation. So one of the things that I have been paying attention to from a technical analysis standpoint is the Fibonacci retracement levels. If you're not familiar with those, basically it's a tool that helps you see where a stock can potentially retrace to before continuing higher. and it's more effective on higher time frames than on lower time frames. It's not something you would use on a 1 minute, 5 minute chart per se. I like to use it on a daily chart. And so what I've drawn out is a Fibonacci retracement taking into account the 52-week low on Tesla, which was 167, all the way up to the high of Tesla that we saw in the past 52 weeks, which was 488.54 back in December. And then based off that, these are some key retracement levels to pay attention to. And if you're on YouTube, if you're looking at the chart here, you know, it's very easy to tell how well the stock actually respects these levels. It's pretty incredible. If you look here, this is the 38.2 retracement, the 50%, 61.8%. And so back here, if we look in February, we saw that Tesla came down, respected the 50, rallied up to the 38.2, got rejected, came down here, slashed through the 50 and the 61.8% extension level. You know, we see it again here. Another level of resistance that actually happened at the end of May heading into June. Again, that 38.2 level right around 365 is resistance. And now, given the news that we had at the end of this previous week between Elon and President Trump, we see that we slashed through the 50% level there. And we, on Thursday, closed below the 61.8, and now we're toying with it again as of the close this past Friday. Showing a lot of weakness in Tesla, and again, it's a high conviction sell-off, in my opinion, because of the volume that we're seeing on it. So this is the kind of thing that you want to be paying attention to, right? You want to see something that's trending, something that's in the news. You want to see a lot of volume, a lot of participants involved. And really, shorts in general, when it comes to the options chain, are very, very active right now in Tesla. A lot of puts have been bought on this stock, and there's just a lot of bets right now that this is going to continue to go down. So really, what I'm paying attention to this week ahead, as far as next levels to be paying attention to on this, really 270 to 273, somewhere in that range. The low that we had on Thursday was 273. And as you can see here, this was resistance back in July of last year, and then also in September as well, and then kind of in October. So this seems like an important level to me, 273. And so I would not be too shocked if we see continued weakness, another headline drop, anything like that. We could see Tesla retest that 273 low from Thursday. And if we get below that, things could get pretty ugly, because as far as I'm concerned, all you really have as far as support at that point would be 250 being a key psychological level. And then beyond that, really it's back to, you know, the April lows right around the 220 area. So I don't expect, you know, a drop to, you know, 220 by Friday or anything like that, but I feel pretty good about my puts, and, you know, I will definitely be looking to take those off and hopefully take, you know, some profit on those if we see continued weakness here at the beginning of the week. And, you know, if we see Tesla drop another 10, 15, you know, $20, with implied volatility on the put side is definitely going to have an uptick increase, and that's where you want to get out when implied volatility is inflated, right? That's what I'm paying attention to this week. Tesla is a roller coaster of a stock already. It's a high beta stock, meaning relative to the S&P 500, it moves generally, you know, 4 or 5 times whatever the market's doing. And so, you know, it's definitely something to have on your watch list. It's in the news, has a lot of things going in its favor, a lot of what you would call confluence with the news, the volume, the technical levels, check, right? A lot of things that make it noteworthy and worth being on your watch list. So that's what I got on Tesla for you. Now let's jump into a stock that looks a little bit rosier for all my degenerates out there. We do have GameStop earnings coming out this week, folks. So definitely want to be paying attention to that. And really, we have a few earnings coming up this week. We're kind of, you know, at a a dull point in earnings season. But real quick here, we have GameStop, which we're about to cover, coming out on Tuesday, June 10th with their earnings. These are a list of all the earnings coming out this week, according to investing.com. Really, just some of the notable ones I would say is Oracle, that's on Wednesday, GameStop Tuesday, as I said. Thursday, you got Adobe, and really that's about it. That's really all I'm paying attention to. But the interesting thing right now is that GameStop, with their earnings coming up this Tuesday, there's a lot of people that think that right now this company is a bit undervalued. This article here, according to MSN, GameStop's earnings could surprise the market. GME looks undervalued. And so I'm not going to dig into all the math behind this, but essentially what this article is laying out is the fact that, if you recall, GameStop made an investment, pretty hefty investment, into Bitcoin. Over the past couple quarters, they've announced it to be their reserve that they, want to be using. And they've made some pretty notable purchases. So, if we looked at the last purchase they announced on May 28th, for example, they purchased just over 4,700 Bitcoin. And so as of today, with the price being at, right around 106,000 per Bitcoin, these digital assets are worth almost 500 million, right? And so that's basically what, GameStop is sitting on. And so the reason that's important is because this is going to affect, at least according to, what this article is saying, it's going to affect how GameStop reports their income, right? So everyone's focused on the brick and mortar, but the fact that they're getting involved in Bitcoin, now you have to take that into account. And we're not going to get into all the fundamentals of it, but basically all we're saying here, all this article is saying here, is that with Bitcoin on the balance sheet now, we have to take that into account. And this could greatly increase the earnings per share the GameStop is set to announce on Tuesday relative to what the street is expecting. And so that's notable because if you get a big beat on their earnings per share, that could drive some institutional buying, that could drive some short covering, that could, bring obviously a lot of the retail side into the picture. And really, anytime GameStop is reporting earnings, it's something to have on your radar for sure, as it is the king of, meme stocks, right? So if we take a look at GameStop and just kind of where the stock price is at right now, taking a look at the daily chart over the past year here, we have a 52-week low of 1873 and a 52-week high of 3581, which actually just recently happened. That was back on May 28th. So if you recall, the other week, it runs in tandem with AMC. AMC had a big monster Memorial Day weekend. And so both of these companies, GameStop and AMC, saw nice rallies on that. And so as of right now, just technically speaking, it is hovering right around the 20-day moving average. It is above the 50 and the 200 and really sitting at an important level of $30. And so, if we get a beat on this thing, I would venture to say that we could see GameStop have a nice spike off earnings and potentially, retest this 52-week high of 35. And I've said this before too, but, 35 is an important level on a longer time frame as well. Taking a look here at a 5-year weekly chart, obviously we had the massive squeeze that everybody knows GameStop for back in, early 2021, up to $120.75. Obviously, this is adjusted for splits and everything like that. It was really like 500 at the time. But basically, taking a look here, 35 has been an important level for a while. So it was support, back here in May of 2021 for a little bit, and then it turned into resistance later on. And so really it's a very important price point, in my opinion, to be paying attention to. And just taking a look at this 5-year weekly chart of GameStop, it does look like it is setting up very nicely to, again, pending what that earnings report looks like, we could be looking at a pretty nice bull run on GameStop, especially if the market itself is doing well as it has been. Again, You got the S&P 500, above 6,000 now for the first time since, we had the all-time highs back earlier in the year. We're back in a bull market territory. So this is definitely something on my radar. And I might just play some degenerate lotto call options on this tomorrow leading into that earnings report. But, use appropriate risk. Of course, anything can happen. We don't know what's actually going to come out of these earnings. It could be bad. It could be good. It's really just, a crapshoot. But I think there's a lot of interest on the bull side, in part because of the Bitcoin investment that GameStop has been making. So that's what I got for you on GameStop. Moving on. So hopefully you've seen this movie. If you haven't, I highly recommend it because it's very, very good. And if you like the markets, you should watch it anyways. The Big Short was an awesome movie covering the '08 crisis and how Michael Burry, the main individual that the movie is based off of, how he had a massive bet against real estate, the housing market, subprime loans and all that. And so basically he's been in the news ever since '08 because of the massive gains that he was able to make in predicting the housing market crash. Well, he is back in the news because of the fact that he has taken another Big Short position, this time on Nvidia. So according to Yahoo Finance, is the bull run over for Nvidia? The Big Short investor Michael Burry taking up short positions. Investors have followed Michael Burry's trades ever since he predicted the financial crisis of 2008 and profited from it by taking up short positions. The man, still known to many as the Big Short investor, is making headlines for his bearish outlook on one of the world's biggest tech stocks. So I found this very, very interesting. His company, I believe, is called Scion Management, if I'm not mistaken. And basically, they have a lot of rather large short bets against the market right now. Burry's Scion Asset Management has numerous put options in Nvidia. Beyond that, the water gets a little murky in terms of predicting Burry's long game. So we don't know necessarily if, this is just a hedge against maybe a bullish position that he has in Nvidia. But there are a few notable companies that he is, betting short against, right? And shout out to Bravos Research on YouTube for this information here. This is where I first discovered this news about the short position that Michael Burry and his management company are taking. But here's a look at Michael Burry first quarter 2025. As you can see here, Nvidia, he is short with just about 900,000 shares. And he's short Nvidia, via puts, right? Via the options chain. So that is a rather large position and actually accounts for 49%, at least according to Bravos Research here, 49% of his entire portfolio. That, folks, is a massive bet and very, very notable, considering the fact that Nvidia has been on a nice recovery along with the market over the past month or so. That is very, very notable. And this isn't to say that he's right and this thing's, going to really crash, but the fact that he has that much conviction, 49% of his portfolio, I don't put 49% of my portfolio in anything. So the fact that he's doing that and he's got, he's short about 900,000 shares, that is very notable. Some other companies that his company is also short, Alibaba is another one here. He's got about 200,000 shares short there. That's about 13% of his portfolio. And then the Chinese company PDD Holdings, he's also short that one as well. He's got puts on that. He's short on JD and Baidu and a few others here. A lot of exposure to China when it comes to these bearish bets that he currently has. But Nvidia is a notable one and pretty interesting to me, considering the fact that you think about some of the challenges Nvidia's been having given President Trump's tariffs and what may or may not happen here. So I think it's safe to say that he is betting that there's going to continue to be obstacles there. We've already, talked on the show about how Nvidia has lost revenue due to not being able to sell certain chips to China based off of what Trump and his administration have been saying. So this is definitely something to keep an eye on. As far as the chart looks on Nvidia, well, right now it doesn't look bearish at all. So again, that's why this is very interesting to me. And look, Michael Burry isn't always right. He is not always right, but when he has been right, he has been right massively. And so that's why I am paying attention to this. I don't currently have a bearish bet on Nvidia, but it is notable and something to pay attention to, because I would venture to say if he is right about this, you're going to have a massive sell-off on Nvidia, because you're going to have market makers that need to hedge against those massive puts that they wrote to him and his management company. Again, almost 1 million shares, right? That's very, very large. And also keep in mind that if Nvidia does tank, the market is likely going to go with it. You got to keep in mind, Nvidia is a huge company. They make up just over 6% of the entire S&P 500. Massive, massive company. So I thought that was a very interesting article and interesting piece, something to pay attention to as well. Let's jump into the economic calendar, take a look at what we got coming up this week. So not a whole lot happening on Monday. You got some things on Tuesday here. This is all from investing.com, by the way. Feel free to look it up. On Wednesday, June 11th, we do get CPI data. So Consumer Price Index. This is going to be very important for the Fed, Jerome Powell, to kind of see where inflation is at from a consumer standpoint. So that'll be coming out. Basically, the previous number, if we look at the core CPI month over month for May, was 0.2%, and the forecast is 0.3%. So we are expecting a slight uptick in inflation. So if that number comes in hotter than expected, we could see, a bit of a sell-off there, and then vice versa, right? If it comes in softer, we could see a nice rally. So we want to, as far as how this relates to, the Fed making rate cuts, right? Basically, if it's really a tough spot to be in if you're a bull, because if inflation comes in super, super hot, then that's going to signal the Fed, hey, maybe we need to cut rates. It's going to be an initial negative reaction, I would imagine, for the market. If it comes in soft, you would think from the bull standpoint, hey, that's good. But that also signals to the Fed, hey, we're doing our job correctly here, and we're okay kind of sitting where we're at on the overnight Fed rate right now. And we don't need to actually, cut rates initially. So CPI comes in on Wednesday, something to pay attention to there. Crude oil inventories come in at 10:30, and then we get a 10-year note auction that comes in at 1 p.m. that I would venture to say not a lot of people are paying attention to. But if you remember, the last auction we had for the bonds was not that great, and the market reacted negatively. So do keep that in mind. That's going to be on Wednesday. On Thursday, initial jobless claims come out at 8:30 a.m., and then we get PPI, which is the Producer Price Index, another gauge for inflation. That'll be coming out. The previous number on PPI month over month for May was negative 0.5%, and the forecast is 0.2%. So something else to pay attention to there as well. And then on Friday, not a lot happening here. Looks like you got Michigan consumer expectations, Michigan consumer sentiment for June. But that's about it. That's what we got going on as far as the economic calendar. And keep in mind that next week we get the Fed rate decision, folks. We are 9 days away from the next FOMC meeting. And as of right now, according to CME Group, we are looking to stay exactly where we're at. No big surprise there. The chances of an actual rate cut, 2.6%. The probability we stay where we're at, 97.4%. So it doesn't seem like we're going to get a rate cut, I would say. As far as the probabilities here, this is really cool. Taking a look at some of the future meetings coming up. It seems right now, based off of, CME Group and what they've laid out here, we're going to be sitting pretty where we're at as far as that Fed, the Fed rate for the next couple of months. And then it looks like in September, we got about a 51.8% chance of a 25 basis point cut there. And then, really that stays about the same for October. So, it it doesn't really seem right now that we're due for a rate cut until September at the earliest. That's what I'm expecting. Now, of course, this can change. It really just depends on how some of this hard data comes out, such as inflation. Keep in mind that while CPI and PPI are important inflation metrics, the preferred inflation gauge for the Fed is neither one of those. I think it's the, what is it called? The personal, it's not CPI, it's another one I'm blanking on right now, but they're looking at all of it, right? And so basically they're going off of the hard data. And so you definitely want to be paying attention to that in the coming weeks ahead. And maybe next week during that FOMC meeting, we could potentially get some cues, whether it's going to be hawkish or dovish tones from Jerome Powell, aka Daddy Powell, right, as to whether or not we could be looking at a rate cut for sure in September. Maybe they bump it up to July, but as of right now, it doesn't look like we're getting anything at the earliest until September. So that's what I got for you. A jam-packed episode, as I said, for this market prep for the week ahead, second week of June. A lot to pay attention to. Hey, drop a comment. Let me know what you think about GME earnings. Let me know what you think about the Elon Trump drama saga. What's going to happen with Tesla? Are we going to, rally from here? Or are we going to tank all the way down to 220? At least for me and my puts, I hope we do that. But hey, let's see what happens. Let me know what you think. As a side note, if you haven't already, we have started another mini series. Make sure to check that out. We are going through The Disciplined Trader, written by Mark Douglas. I just put out part 2 this morning, and part 3 will be coming out next week. Trading psychology is a very important topic not a lot of people talk about. You can have the perfect setup, but if you don't have the mental game figured out, what happens between the ears, it can really set you back. So make sure to check that out. I will be back as always midweek for a midweek market check-in. We'll see where we stand based off of CPI data and where the market's at. We'll see if we can get any closer to a new all-time high. But thanks as always for watching. Appreciate the support. Make sure to like, subscribe, and follow wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.